The Financial Planner, presented by the Bombay Stock Exchange, IPF.
Hello and welcome. You're watching Financial Planner, your one-stop source of everything that you need to know about financial planning and also how you can create wealth through systematic investments over the long period of time. My name is Smriti Rao. With me, certified financial planner Sumit Ved. And over the course of the show, we'll be learning not just about financial planning and where you can invest to make the most of your money, but we'll also start picking up the basics of the stock markets. Through the day, we get a lot of questions and queries about how you can start investing and dabbling through shares. So we'll talk about that and all the basics that you need to know before you get started. Sumit, welcome. Great to have you back.
Thanks a lot.
So let's get started with the stock markets and our stock markets basics. That's our first segment. Now remember, last couple of episodes we've talked about why investing in the share market is not a taboo. You can do it and it's not such a bad thing. Many people consider it perhaps a form of gambling, but we've learned that through some serious homework and some serious understanding on what shares are all about, you can also go ahead and make a go of investing in the markets. But let's get started, Sumit, by talking about, we've established and we've talked about what a share is. We know that we can participate in a company's growth by investing in those shares, and we know that we can go to the stock exchanges and that's where all the shares are and you can buy and sell and trade shares. But when I buy shares in a company, how do I actually make money off it?
Great. I'll start off by a word you used, which is right in the beginning, was dabbling in equity. Okay?
Yeah.
And why I want to highlight or start off with today's program with that is that that's a word most of the youngsters these days many a time use while talking about stock market. I dabble in stock market. Now that's a very non-serious word. Dabbling, I don't know the true dictionary meaning, but the sense which I get every time I hear the money is that it's like kind of a hobby, I dabble.
Yeah, it's something you do on the side actually.
Yeah, I'm just dabbling in it. Not a right word. You never dabble because that's where the perception of equity is equal to gambling comes into the play. It's not that. It's not about dabbling. It's not about gambling. It's about investing. And investing is over a long period of time when you have a defined goal in mind. Goal means what kind of return I need over what period of time helps you articulate how long should you stay invested in equities. With that context, let's try and understand how can you make money in stock market or in share market, as you say. So there are two forms. One is the appreciation. That means I bought a share of company A at 10 rupees over a period of time. Because of the good performance of that company, they generated good profit. As a result of it, the share price from 10 rupees went and became 50 rupees, let's say over 2 or 3 year period. That's one way. That's known as capital appreciation or also known as capital gains. Okay. The other way of generating income or rather return out of equity market to share market is what we call as dividend income. Now, dividend income in a country like India is of much higher repute and much better understood by larger number of market people, because dividend is something which happens on a regular basis. If you go back in history of Indian stock market, there was a term which we used to really talk about known as blue chip companies. And blue chip companies were categorically those set of companies which were showing good profit over a regular period of time, over a longer period of time, and also because of good profitability, they were declaring good dividends. Dividend is source of regular income. There are companies which declare regular dividend every year. There are some of them which declares few interim dividends during the year itself. And Indian investors have always paid a higher premium or have felt much more comfortable with a higher dividend paying or with a good dividend paying record companies because it generates regular income. So these are the two formats in which income usually gets generated out of stock market, share market.
All right, so just to recap, so the two ways that you can make money through your shares is through A, capital appreciation, which Sumit just explained to us. You buy a share, you hold on to it, you buy a share for 10 rupees, you hold on to it, it becomes, let's say, 20 or 50 rupees. So your capital over that period of time has appreciated. That's how you make money. The other thing, the second way that you can make money off shares is through dividends or dividend income, as you have learned over there. Sumit, what's been your experience with your clients when they come to you and they talk to you about shares and they want to start looking at the stock markets itself? What do they say? Do they have a sense of how they can make money off the shares, or is that a very basic understanding that they have of the markets?
There are two extremes, and that's where I started off by explaining the word dabbling to you, because you hear it quite often these days. Okay, the two extremes set of clients are one, those who understand equity market, share market very well. Okay, and those who does not understand it at all. The first set of clients are very, very few. The percentage is 90-10. That means if there are 100 clients who come to us portraying as if they understand equity market, there are only 10% who really understand it, 90% do not understand it, but they talk.
But they talk big, but they make the sounds that makes it look like they actually understand it.
They're the dabbling variety, the investing variety of the top 10%.
Right,
so that's first kind of an experience which we are getting. The second experience which we get is it's a very herd mentality kind of a syndrome in India. You know, every time index that is a stock market index touches a new high, larger number of people start talking and doing stock market than every time market goes down. You know, and it is so interesting to really see from a psychological point of view that India technically is a discount-oriented market.
Yeah.
That means whenever there is a sale in India, people tend to go and make much more purchases. Whereas when it happens in stock market, that means when market is down, it was down at 8,000. That means there was a sale going on. There was a stock whose intrinsic price was 100 rupees, was available at 10 rupees. People will not go and buy it. They'll buy it when the 100 rupees become 200 rupees. It's a very strong herd mentality, and the thumb rule is whenever cocktail circuit or your party circuit starts talking about equity market, it's time to get out, especially in India. So these are the two trends which are very dominant in India.
All right. So let's also now start looking at, you know, we just talked about how you can actually make money off those shares, but we'd like to know a little bit more about how you can actually go and get those shares. You found a company that you like. Now you know that, okay, I can make money through capital appreciation or through those dividends. But how do you go and find a company, and where do you buy these shares? We know they're available at a stock exchange. We've compared it to a vegetable mandi, and but it's not so simple, is it? But how do you actually buy your shares?
Important question. I think first and foremost, when you have to access stock market and you have to identify a company and buy it, you need to have a good investment advisor, a specialist, an expert in this area of stock markets, and that advisor in most of the chances will be a stock broker for you. There are a large number of big firms like Motilal Oswal, Edelweiss, Kotak, many more such firms in India, spread across the country, who are experts in stock market and who give their services to various clients at various point of time. So as a client, I need to get an expert who can really help me access the market, which in this case is broker. Identify that, go and sit with a broker. Ideally, you know, you should create a financial plan of yours with the help of a financial planner and try and fit stock market or stocks into that. If you can't, then at least go and have a heart-to-heart discussion with your stock exchange broker. What is the objective? What is the goal which you want to really achieve by buying that particular stock? Like many people talk about retirement. You go and talk about, at the time of retirement, I need so much of money, and for that I want to buy a stock. And then along with that broker, create a plan in which you will regularly go and invest in that particular stock to achieve that particular goal. Thumb rule, whenever you invest in equities, an underlying word is invest, not dabble, is it's for long term. Be ready for volatility. Higher the risk, higher the return, which gets managed over a longer period of time, much, much better.
All right. So basically the main takeaway from that is, of course, you need a broker, or like Sumit mentioned, just go and find a local unit of a big brokerage firm. If you live in Mumbai, you'll probably see them across some neighborhoods. So you'll probably see Motilal Oswal's branch, or you might see a little office that gives you the name of the brokerage firm. Just go to them, talk to them, and they'll be able to sign you on as one of their clients. We'll talk about how you can do that, but in the next episode. For now, it's time for us to take a short break. When we come back, we'll talk about some investment basics. One of our viewers has written in immediately, and he wanted to know whether his financial plan, whether his goals are on track. Remember, we love to get your emails. You can email us at financialplanner@utvmoney.com.